started off well and it stayed well, more importantly. So we were close to 0.5% or thereabouts at the start of the trading day. We are now up close to 1%. It's really strong show. Just pull up the Nifty gainers and you will see pretty much what we've said in the headlines. It's Reliance Industries, so oil and gas comes into play. There is select buying in IT names, so those come into play as well. And auto is the other one which comes into play. 3% for HCL Tech, 3.5% for Tata Motors after the steady performance yesterday. JP, ICICI Bank, select other auto names and Reliance Industries in particular with the kind of move that RIL has made today. 2.5%, 833 currently. It's a strong show by that one. Morgan Stanley adding it to the focus list as well. A couple of good news that came out yesterday evening as well. Some clearance for some oil and gas blocks. So RIL is the stock in focus. Not too many losers really. I mean, far and few in between. And the ones which have lost also are hardly down close to 1%, So it's looking strong for the large caps, but the cheer has spread to the broader markets as well, and lots of mid-cap stocks in focus too.
Absolutely. So great going for the frontliners as well as the broader markets, which are showing you quite a bit of conviction. So no surprises to see a very strong market. Brett, Reliance Industries, your star for the day. But let's focus in on the macros. You've got the rupee, and yesterday, remember, it touched a 2.5-month low. But today it opened lower higher by about 11 paise to 54.75 against the US dollar at the interbank foreign exchange market on the selling of the US currency by exporters. Besides the strong opening of the equity markets back home and the strength in the other currencies against the US dollar, that's also supporting the rupee. The benchmark 10-year bond yield, that's eased only a tad to 7.88% from Monday's 7.89% closing, as traders are light following the sharp selling that we've seen in the last few sessions after the budget. There are expectations of a rate cut by the RBI at its policy review on the 19th of March, and following the weak GDP numbers as well as the subdued inflation also will help.